Welcome back. Now we'll look where markets ended a wild week driven by volatility in chip stocks, developments in Iran, and the largest IPO in history, SpaceX, making its debut on the NASDAQ. We've got more details on SpaceX's first day of trading coming up on the Barron's Roundtable. There were also concerns over inflation this week, producer and consumer prices spiking to the highest levels in years, pushed higher largely by the surge in oil prices. Joining me now is the CEO of Marriott International, Anthony Capuano. Tony, great to have you. Thanks so much for joining us this weekend.
My pleasure. Thanks for having me.
The latest inflation data, hotel and motel prices are up better than 5% from last year. How do things feel for you on a growth level versus inflation level?
Yeah, so we're feeling really good about the demand patterns everywhere in the world, with the obvious exception of the Middle East. Here at home in the U.S., we saw revenue per available room in Q1 grow over 4%. And what was really encouraging about that, for the last number of quarters, we've seen luxury strong, but we really saw strength across every quality tier where we compete. And when you look at some of the macro data, this year, U.S. travel spend is expected to set a record, $1.4 trillion. And so this shift we've seen in consumers to prioritizing their disposable income towards travel and experiences is a really compelling trend as it relates to our performance.
Well, it's just incredible, don't you think, Tony? I mean, even with the spike in oil prices, look at the markets up in the double digits since the end of March. Feels like investors and executives are looking through this spike in oil and actually clocking in some very strong business and buying the market.
Yeah, it's a great point, Maria. And as you might expect, we've looked back over decades about the impact or the correlation between oil prices and travel trends, and it's almost counterintuitive. Over prior periods where you saw a big spike in fuel prices, you didn't see the parallel drop in travel demand that you might expect, and that seems to be holding true even in the elevated fuel price environment we find ourselves in today.
Very good. I know that the Middle East RevPAR would be a fraction of the overall RevPAR that you're talking about, but have you seen an impact from the war?
We have. We just to ground you, your intuition is right. Our Middle East portfolio represents about 3% of our global rooms and in parallel about 3% of our global fees. But we expect RevPAR in the Middle East to be down about 50% in Q2. Obviously, as you know, we all pray that the conflict gets resolved. We think it'll recover relatively quickly, but Q2 is pretty tough in the region.
Meanwhile, the highly anticipated World Cup is now underway. You can feel the excitement from coast to coast. I know Marriott Bonvoy is an official sponsor. You partnered with Visa for a special promotion. Fans could win a sleepover at the stadium hosting the final match and tickets to the game.
Yeah, it's great. It's something that we started based on our longstanding partnership with the NFL, and we've done it for the last decade or more at the Super Bowl, where we actually convert a luxury box to a Marriott hotel room, and then we run a competition, and the winner of that competition spends the night before the match or the night before the game in the suite, and then they get to invite family and friends on game day to watch. I think it's the first time we've done it for World Cup, but we're pretty excited, as are our nearly 300 million Bonvoy members.
What has the World Cup meant to business today?
Yeah, it's exciting. I mean, it really is a tentpole event for travel. We're thrilled that the U.S. is one of the host countries. We expect the impact of FIFA World Cup to be about 40 basis points on our revenue per available room here in the U.S. And because it's our biggest market, we think it'll be a 30 to 35 basis point impact on RevPAR globally. So we're quite excited about it.
And there's been a lot of talk about the lack of demand for hotels for the cities hosting the World Cup. The New York Hotel Association lowered its forecast for hotel room revenue tied to the World Cup by 60%, Tony. What are you seeing there?
Yeah, we're just not seeing that in the data. Now, admittedly, if you look at prior World Cups, what happens is as you get into the later rounds, depending on which teams advance, what the global rankings of those teams are, what the propensity to travel for their fans is, that all has an impact on what we see. But in terms of release of room blocks by FIFA and some of the other trends that have been reported, we anticipated all of those trends, and we continue to stick by our expectations of that 40 basis point lift that I described earlier.
And in terms of pricing, Tony, what do you want to say? And I know it, depending on which day it is, will dictate, what price someone gets for a room. But, we're wondering if, in fact, prices have moved along the lines of inflation as well.
Yeah, I mean, obviously hotel rates are part of the inflation calculus, and so we do move in some parallel way with inflation trends. But from my perspective, one of the beauties of Marriott's portfolio is that we compete all the way from the mid-scale tier to the luxury tier, and so for fans at a wide range of budgets, we'd like to think we have the opportunity to accommodate them as they follow their teams around the region.
Tony, we'll be watching. Great to have you this weekend. Thanks so much for being here.